covered before. Gotcha. That's okay. It's really important that we know what's covered before the loss. And one of the reasons for that is that's going to bring value to you if you have an understanding before the terrible loss happens of how a loss might be paid, who pays it, and where is that all coming from. So first things first, we really want to know what type of homeowners association are you? There's many different types of associations out there. And I always tell people never trust the naked eye. I tell folks within our agency that. You may go to a homeowners association, walk through a gate and think that you see a bunch of single family homes, and you may want to assume that these are all single family homes individually owned by unit owners, and therefore the association's insurance is not responsible for those structures. And your governing documents could read quite differently. We've all seen this throughout our career. So we don't want to trust the naked eye. Sometimes it's right, sometimes it's wrong. We need to look to those governing documents to determine exactly what type of insurance the association is obligated to provide and how far that goes into the unit or interior of the unit. So typically for a single family home, you, again, reading the governing documents and looking into that, but typically the association would be responsible for ensuring common area amenities like clubhouses and paved surfaces and swimming pools for all to enjoy, versus an attached dwelling where typically the association is going to be responsible for some type of structural coverage, which those governing documents should dictate. I always say should because in our career, we come across moldy, oldie governing documents. Typically, these were written, for the developer, along with the developer, back when the initial construction took place. And I got to be honest with you, those moldy, oldie governing documents really they can sometimes lack clarity in exactly what is covered.
I
So
wish you were not so accurate on the moldy part, but like literally we've had the moldy ones.
yeah, it's very true, especially when we weren't paperless, right?
Yeah.
Back in the
Yeah.
day.
I can
So
still
this
smell
leads
them.
us to the next slide, please. I want to talk about different coverages that you may have. So there's coverages that for an attached dwelling, there's three types of coverages that we're going to play with tonight. And that is all in, bare walls, and following form. Now, if you've got a perfectly written set of governing documents, you go to your insurance section and it is crystal clear what the association is responsible for insuring, what the unit owner is responsible for insuring, and it's very, very simple to decipher. A following form policy might be the best and most accurate policy for you. A following form policy basically states in the policy that at the time of loss, that insurance carrier is going to look to the governing documents to determine what is covered. Now that's a perfect world scenario, but for a lot of us, we may have governing documents that aren't perfectly written at the moment. So you may want to look to a more what I call proactive insurance policy. And I always say that that is an interim solution because ultimately you want to have a set of governing documents that is crystal clear for you and the community. It's going to, in the long run, prevent arguments, prevent questions. So I always say we can be proactive and go with a bare walls policy or an all-in policy, but with the caveat that you should be working with your association's attorney to update those governing documents to make them more clear in the future. Does that make sense? So an all-in policy is going to be typically for the interior finishes up to builder's grade, whereas a bare walls policy, and you'll see it on the picture here to my right, is going to cover up to the unfinished surfaces of the interior of the unit. And the unit owner would be responsible for ensuring or covering the fixtures, cabinets, all of that good stuff. Sometimes, and it's not always available with every carrier, but sometimes you can find all-in policies that also include betterments and improvements made by unit owners since the time of build. They're not very common. And back in the day, some boards were really adamant. They liked that. They felt like it got things paid, got people back in their units, no questions asked. There were other community members that had a real issue with that, saying, well, why do I want to pay for Susie's, upgraded cabinets and fixtures? So just think, just so you know that there are some of those that exist, but typically we see all in covering up to the builder's grade fixtures.
And Charlotte, it's true too that sometimes you're looking at the governing documents and they'll specify all in with upgrades are required. It's a required coverage in the governing documents, which I mean, I personally have an issue with it too because no manager and no board of directors wants to keep track of every time somebody upgrades their kitchen, right? We don't want to know, we don't want to have to factor that into your valuation every year when we're doing it. So if you can avoid it, I would highly recommend it. But sometimes you can't, sometimes you're stuck.
Agreed. Next slide.
So we have on this little journey out of Kansas and into Oz, we have some companions on this insurance journey. Our companions are insurance policies. And the first one we're going to talk about is specifically for condominium unit owners, and that is your HO6 policy. Now, that policy is something every individual owner should have that covers the property, which I'm going to get to in a second, but outside of the property, it also covers your liability. So if somebody trips and falls inside your house and gets injured, that sort of thing, it covers your loss of use. If you can't stay in your unit, if you need to move elsewhere because of a covered cause of loss, that's where that's going to get paid from. And also loss assessment, which I'll explain after the other stuff because I think it'll be more clear. So your condominium owner's policy, your HO6, that property coverage should be anything that you as a homeowner are responsible for insuring based on your governing documents. Ideally, you want there to be no gap between what the HOA is supposed to insure and what you are supposed to insure. No gap in between those so that everything minus deductibles, but everything is covered somewhere. So you need to be aware as a homeowner where your coverage for the HOA stops and where your coverage as a unit owner begins. So that's super important to know that. Loss assessment coverage is built into almost every homeowner's policy in minimal limits. I always recommend to owners to see if they can get higher limits just in case, because let's say your community has a beautiful clubhouse and there's a fire in the beautiful clubhouse and it burns down. And let's say that your property policy for the association has a $100,000 deductible. Where is that deductible going to be paid from? That's going to be a special assessment to all the unit owners so that everybody shares in paying that deductible. And that's what loss assessment is for. It's for if there's a insured loss for the community that an owner is being assessed for, that's where that money comes. It does not cover a special assessment because y'all forgot to save money to repair your roof. Does not cover that kind of assessment. It only covers assessments that are related to insurance specifically. So that's the first one. We can go to the next slide. Our next companion is similarly, if you live in a planned unit development or a single family home community, you would have an HO3 or a dwelling policy. It's the same type of policy, but this is going to have more meat to it. It's going to cover your house, your building, your structure. It also covers the contents and the loss of use and loss assessment and liability, just like that HO6 policy did. But this one also covers the actual structure that, because you as the homeowner are generally responsible for that type of coverage. Okay, next slide.
Okay, so this is important. This is an important one for you guys to remember. The total insurable value. We love acronyms in the insurance world, but Terri and I are very conscious not to use them without explanation. So you may see it referred to as TIV or ITV sometimes, total insurable value. And we get asked this by boards a lot. Where do we get that total insurable value? And here's what I need you to hear. Ultimately, the board needs to decide, come to an agreement that this total insurable value is okay with us, that this meets the requirements. Now, No one expects you to just pull a number out of a hat. There should be some starting points and there should be some conversations with your insurance professional. So for us, where we start with that number, or that where we start that conversation, is we go out and physically visit your property. So let's say your manager, Kristen, gives us a call and says, hey, I'd like to get a quote from you guys for this homeowners association. One, we will ask for those governing documents. And let me tell you, I joke about red flags all the time. If you ever contact an insurance professional for your HOA insurance and they don't ask for the governing documents, because we just talked about the importance, red flag, okay? But after asking for those governing documents, we will go look at the property. We're going to take some measurements. We're going to take a look at what type of railings you have. We're going to take a look at the roof materials. We may notice some little slip and fall hazards. We may not. We're going to look at electrical panel components, all kinds of things that we're going to really kind of check off, knowing how we need to submit to insurance carriers. And then we're going to bring that information back to the office, and we're going to take a look at the county assessor information. We want to know what square footage we're dealing with. We also want to take into account any walkways, breezeways, common areas, and we're going to plug all of that really valuable information to an industry-wide calculator. There are several programs out there. I use CoreLogic. Terri, do you as well? Yeah, that's what I thought. So we're going to plug that information into an industry-wide calculator, and it's going to give us a price per square foot to rebuild at that given time. I always stress that given time because we know how inflation works. And so what we put into a system today could be different or could look different in a year from now. So every year upon renewal, we want to make sure that we're rerunning those numbers. We never want to just quote unquote let it ride. We want to make sure that we're still plugging those numbers in and making sure everything's accurate. We also want to make sure that we're having conversations with your board and your community manager if anything has changed within the association. So for instance, we had this happen a few years ago. We had a homeowners association that had 2 playgrounds, 2 tot lots, and they decided to rip them out and not replace them. Well, that's very important information to know because, well, we no longer need to insure the 2 playgrounds because they no longer exist. And the same goes for if you add infrastructure. So we just want to make sure that we're having those conversations back and forth to make sure that we're still insuring everything. So with that price per square foot to rebuild at this given moment, we can come up with a total insurable value and have that conversation with you. Just some things to keep in mind. Lenders will often not fund loans without sufficient coverage. So if lenders look at your certificate of insurance and feel, this isn't nearly enough to insure the entire property, they will come back and have issue. Typically, we deal with this and we can show them our report, our CoreLogic report, and they can say yes or no based on the information that they get. You also want to avoid co-insurance penalties. If you are undervalued, you may be at a loss and have to pay some insurance penalties. And this is what I always say, like buyer beware. There are endorsements out there that are really, really great endorsements. If you can get them, an extended replacement cost endorsement and a guaranteed replacement cost endorsement, or I should say or. An extended replacement cost endorsement, we typically see at about 125% of the total insurable value, meaning you have a 125% extended replacement cost endorsement. And that basically says that, hey, you know what? We as an insurance company know that inflation can happen. And if throughout the policy period, there is some inflation and it does cost up to 25% more to rebuild at the time of loss, we'll cover that. There is a caveat to that though. The endorsement also reads that you had to be insured to value to start with. And so I always talk about bad actors and buyer beware. Terri and I have both run into this. We've seen some bad actors out there, insurance quote unquote professionals that will say, here you go, you've got 125% extended replacement cost, so you're good to go. Well, then lo and behold, we do a little bit of digging, or the board sees this and says, wait, we should be insured at $10 million. And you're giving us this extended replacement cost endorsement on top of $8 million and saying that we're good to go. Well, just so you know, when the loss occurs, that is a major issue because you're not adhering to the requirements of the endorsement for it to be good. So just be careful. It's not meant to take an underinsured value and make it better.
I feel like I want to get a little red flag so I could like wave it when we talk about those issues to get people attention. That's a red flag. I also was thinking when you were talking, Charlotte, um, about sometimes we see valuations or like we're get asked for a new quote and we look at what they currently have and their value is way higher. More often than not, it's lower. But sometimes you see it and it's way higher. I mean, I had a conversation with one manager and I was like, do you have gold leaf like windowsills or something? I don't understand what's going on here because it was
Mhm.
so high. And it turned out when I asked, did you get a statement of values? And that's something that board members should be asked to look at and sign off on. So
Mhm.
be aware that you need to look at that and make sure that the information is at least accurate. This particular community that I'm talking about, the person that went out to do the valuation and that looked at it online, they saw another community next door that looked very similar. And because they were built at the same time by the same builder, but they were actually two separate associations, they were insuring the whole thing. They were like way over insured.
Oh
So
dear,
that was great because they got to have their bill come way down on that one. But
for sure.
it was definitely shocking to them. I was like, I don't understand why this is so high.
And if they saw that statement of values, they probably would have realized that, oh my
Yeah.
gosh, no, you're doubling our association. We're only 60 units. Why are there 120 listed? You know,
Hmm.
kind of a
Exactly.
thing.
Exactly.
The other endorsement is guaranteed replacement costs, which basically the insurance carrier is saying, you know what? We understand inflation happens. No matter what it costs to rebuild, we will guarantee that we will cover the loss. But once again, you still need to be insured to value to begin with.
And more often than not, those endorsements come into play when like the worst has happened, when you've lost an entire community.
True.
So hopefully you'll never need to put those into play.
True. Next slide, please.
So then you have the dreaded loss striking. We're just for the sake of this slide, we're not going to talk about the entire community disappearing. So, but for your immediate response, what do you need to do right away? You do not need to call Charlotte and I right away. And that has happened. We have received calls from community managers or board members, and you can hear the sirens in the background. And I was like, no, really, you can wait till the next business day to give me a call. You don't need to worry about is the insurance going to cover if the fire department puts a plywood or so. Don't worry about that. It's fine. They know what they're doing. We know what we're doing. You make sure people are safe. You make sure that there's not going to be extra damage caused. You can contact the restoration company. You don't need our permission to do that. You can take care of that on your own. Make sure you're taking photographs or even video sometimes if it's appropriate. So keep track of that information. Write down notes so that you'll remember them later and keep track of any receipts for things that happen, in that immediate time. Now, when you're turning in a claim, and right now we're talking about property claims, not other types of claims, but when do you submit it? The next business day is fine. You don't need to submit it on the weekend or call us in the middle of the night. That's okay. So turn it in once you have all the information, because we're going to need a lot of information from you in order to open up that claim. If you don't have all the info, you can wait until you get it all. Who do you submit it to? Most of the time, you call your insurance agent. Some agencies have a dedicated claims person. But you can start with whomever you're comfortable with. You can even call your carrier directly. A lot of times you can do that if you're more comfortable doing it that way. But the important part is to get the claim open within a reasonable amount of time. Seeking help and guidance, you can definitely call your insurance professional, call their office. We can walk you through this. It might be something that's never happened to you before, but it's probably happened to us before, and we can help walk you through and give you direction on where to go. The most interesting bullet point on this is who can turn in a claim.
Mm.
Mm. Um, Anyone that is a named insured on the policy, and most policies named everyone in the membership. So that means Joe Blow unit owner in 102 can call and make a claim, and we have to open that claim. Now, the board might not like that, and the manager doesn't like that because everybody wants to be able to control what's going on, and we understand that. But we, as insurance professionals, cannot deny them from opening that claim. That's our
Yeah,
job. Go ahead.
we are legally obligated to open that claim. But what we tell folks that call us when a unit owner or a member of the community calls us and wants to open a claim, the first thing that we're going to ask is, have you talked to your community manager? Or if you're self-managed, have you talked to your board? And no matter the answer, our reply is always, I'm happy to walk you through this. I'm happy to take your information. Just so you know, as soon as we finish this phone call, I am going to call your community manager. And that is honestly to save everything, to save everyone and streamline everything through your very competent community manager, so that we're not missing any details, so that all of the payments that need to be made are made through the community manager. It's really in an effort to streamline, not to block people from doing what they need to do.
Right. And it doesn't mean that whoever opened the claim is going to be the main point of contact for that claim going forward. That certainly is not played into in the law. But we do have to open that claim if it is requested of us, and we will go ahead and do that. I think that's it on that slide. We can go to the next slide. So we're following down this yellow book road of when to file the property claim. So you want to ask 3 questions. There's really a 4th question now, but we're going to start with these 3 main ones. The first question, and I'm going to go into detail of all 3 of these, but the first question is it a covered cause of loss? Then, is the damaged property covered by the policy? And then, is the cost to repair a place greater than what your deductible is? So the first question, is it a covered cause of loss? A cause of loss, also called a peril, is the bad thing that happens. Most policies, property policies, cover things like fire and water damage, or the dreaded vehicle running into the building, which seems to have, it's like one of the most common things we're seeing now outside of water. Things that typically are not covered are earthquake, or a flood. Earthquake, unless the earthquake causes a fire, then it's covered, which is why there's a really bad joke in the industry saying, if ever there's an earthquake, somebody bring a match. It's a joke. Don't really do it. Just wanted to see how many people were still paying attention. Okay. So, is it a covered cause of loss? So let's say a vehicle ran into the building. Yes, that is a covered cause of loss. So then you go to the second question, is the damaged property covered by the policy? It's the HOA building. Yes, it is covered by the policy. It's definitely meets the criteria of question number 2. So you go to question number 3, is the cost to repair or replace whatever was damaged greater than the deductible? That depends. You might need to get some quotes first to figure it out. It also depends on what the deductible is for your community, and we're going to get into that conversation in a few slides, but these are the questions you need to ask. So if the answer to all of these is yes, then you can go ahead most of the time and go ahead and file a claim. Then you get into the next slide, extra considerations. Next slide. There we go. So when you're looking at the item that was damaged, remember that the responsibility to maintain an item and the responsibility to insure an item are 2 very different responsibilities. So case in point, let's say you have kitchen cabinets. Everybody has kitchen cabinets. Whose responsibility is it to fix it if the cabinet door falls off? The person that lives there, right? Of course it is. It's their responsibility. It's their cabinet. They're going to fix it. But let's say your community has a walls-in policy and there's a fire and now that cabinet got burned. Whose responsibility is it now? Still your responsibility to fix it, but where's that money going to come from? It might come from the insurance policy for the association. It might come from the insurance policy that you have, your HO6 policy. But so where the money comes from to make those repairs could be from an insurance policy. So remember that those are two different things. So if you're looking at your maintenance matrix and thinking that is also your insurance matrix, usually no. Could be, but usually no. If your documents, if your governing documents or your matrix are vague or silent, make sure you consult counsel so you can get those things clarified before there's a loss and before you have to have it figured out on the other end. And also understand, and this is really hard to fathom right now, especially when a lot of folks are trying not to turn in property claims. Sometimes, even if you know darn well that it is under the deductible or it's not the HOA's property to insure, it's the owner's, sometimes that HO6 carrier, the condo unit owner's carrier, has to have a decline from the master policy in order to provide any coverage at all. And the reason for that is because lender requirements, regardless of who the lender is, the lender requirements on all mortgages say that the HOA's policy is primary, meaning they have the right of first refusal. They always cover the insurance first, and whatever they don't cover, then the HO6 policy covers. That has to do with the lenders, not the carriers. That's their thing. So sometimes the HO6 carrier says, well, before we pay for anything, we're happy to pay for it, but we just want to make sure that somebody else isn't responsible for this first. So you might need something in writing or a decline in writing from the carrier saying, nope, it's not covered, which means you might have to turn it in as a claim in order to get it declined. Now, we know in the current climate of insurance, turning in property claims is not our favorite thing to do if we can absolutely avoid it, especially if it's under the deductible or especially if you know it's not going to be covered anyway. So I know that a lot, and Charlotte, tell me if your folks aren't doing this, but a lot of times you'll get a letter from your insurance agent saying, we are not turning in this claim because these reasons, and that sometimes suffices. Not always, but that's what we're going to try first.
Yeah, and I always say it's worth a conversation.
Right.
So if you feel strongly, if you're working with your community manager and you all feel strongly that, you know what, I think it's better that we don't turn this in, I'm also going to say, great, maybe I
Right.
agree, but let's also involve counsel. Let's make sure that we're all doing the right thing and that we're all on board and comfortable with this, because the last thing we want to do is get the board into any kind of trouble for not turning in a claim. So
Exactly.
it's always worth a conversation.
Exactly. And remember that even if you do have to turn in this claim and it gets declined, it's going to show as a zero payout claim on your loss history. So it's going to show up there and it's going to be zero. Somebody needs to make sure you keep notes so you remember what that claim was about and why it's a zero, because that's easily explained away. And then the bottom two lines on this slide are really difficult for some board members and managers to not understand. It's very easy to understand, but it's sometimes hard to get on board with. Fault is irrelevant in a property policy, totally irrelevant. And maintaining something doesn't mean it's your fault if it fails. So a water pipe breaks. Did that homeowner take a wrench and hit it until it failed? No, it's an accident. And that's exactly what insurance is for, accidents. And even if something was intentional, before we started this, Charlotte and Kristen and I were talking about a claim I had once where a homeowner who was mentally unwell, she started a bonfire in her living room. Absolutely everybody knew that she started that fire. And that was a covered cause of loss. Even though it was an intentional fire, it was a covered peril fire. The property that it damaged was covered by the policy. The structure of the building, it was covered. So everybody loves to point fingers. I mean, we learned how to do that in elementary school, right? He did it, she did it, it's their fault. What? Let that go. Just,
Yeah.
oh, hey, wait, that's a different musical. Let it go. All right, I think we can go. Do we have any more here? Or are we ready for our next slide?
Let's talk liability. So there's these are some of the types of liability coverage that we see for us in association. Your general liability, the most common is always going to be your slip and fall claim, right? It's been rainy out, there's some slippery components within the association. Someone, a guest, slips and falls. So you've got your general liability. Directors and officers liability. This is very important because this protects you, the board members that are making decisions on behalf of the association. Workers' compensation. I used to get this a lot. Now I think everyone has a better understanding of why homeowners associations should have a workers' compensation policy. I used to be asked all the time, why would I need a workers' compensation policy? We don't have any employees. Some associations do, but I would say the majority of the associations we work with do not have direct employees. So why would you need workers' compensation? Well, we've seen this happen in the court of law quite a few times now. Unfortunately, we have a lot of case law around this, but sometimes the association can be deemed the employer in the court of law by default. And if you have the workers' compensation policy in place, then you would have that coverage for the person that has been injured. There are also workers' compensation policies that you can endorse to include the board of directors. However, be careful, please be careful and read the fine print. The workers' compensation policy that includes board of directors will protect you for the work that is within your scope as a director. So I have personally never seen a set of CC&Rs that state that the board president should also be fixing roof shingles. I have never read a set of CC&Rs that say a board secretary should be doing a paint job for the association. So we want you to be very careful. Having the endorsement for the board of directors does not mean that you should be doing anything outside of your scope as a board member, but important to have that protection. So if you come across a liability claim, when to file, it is really important that we understand that especially directors and officers liability policies are what we call a claims made policy. Now, this means it is important that when you suspect a threat of a D&O claim, that you report it immediately within the time frame of the policy period. If you exceed that time frame and you had not turned in something that you suspected could be a D&O loss, you might be denied coverage. So I get asked this a lot. Well, you tell me, when would I turn in a claim? Have a conversation. This can be a different answer depending on the circumstances. I have actually been in a board meeting, and here's the funny thing. I've been in this industry for over 20 years. My first year as a licensed insurance broker, I went to my first board meeting. I was covering for a coworker. He really thought I was ready for this. I walk in and it was a standard, like I was just going to explain the insurance coverage that we were providing, easy breezy. Well, within the first 10 minutes of that meeting, a homeowner walked in, started yelling, cursing, and telling everyone, I'm suing you, pointed at me and said, I'm suing you. I don't even think she knew who I was. So these things can happen. There may be board meetings where you have a homeowner that is feeling upset about something and may start throwing around some of these words, litigation, I'm going to sue you, things like that. If this happens, make sure that you're having a conversation with your community manager, with your insurance provider, quite possibly your attorney, association attorney, and figure out if this is something that we should turn in the claim on. Keep in mind that different policies are going to react different ways. There are some D&O policies that will say, no problem, we'll treat this as an FYI only. This could turn into a claim, but it's not a claim yet. And they won't assign a claims number or put any more thought into it. It's literally just documented so that you're good to go. I just want you to keep in mind there are other policies out there floating around where even if it's just, hey, we're just letting you know, putting you on notice that this could turn into something, they may very well give you a claim number. I don't want this to scare you. That's just their protocol. They need to assign some type of identification number to it. It does not mean that it's going to turn into a claim. It does not mean that it's going to be held against you in any way. Remember, it's still zero paid out, nothing's happened. And then your insurance provider should be following up. Hey, what's going on with this? Did anything really come to be? And then upon renewal, if we can close it out, and we're good to go, then even better. So just remember that. Anything you want to add there, Terri, on the?
Yeah, I think you kind of explained it. A lot of folks, they think that putting a carrier on notice means that they're not opening up a claim, but that's not necessarily true.
Yep, yep. But important that you don't want to get to a place where the claim is denied. So don't be
Right.
afraid to contact your provider.
Mhm.
Next slide. Okay, so you're going to hear, this is kind of our theme tonight, right? Business decisions that are not about who is right. We don't need to point fingers at anyone. And frankly, I always say I want the board to avoid any type of liability. So let the insurance carriers hash things out, right? I want to take that liability off of your shoulders. We included MedPay in here because Terri and I kind of laughed at this. We don't see MedPay pulled in or utilized a whole lot. And recently we've had a couple situations where MedPay was able to be used. So a lot of
Mhm.
folks ask, well, what the heck is MedPay on this insurance policy? It's usually a very small amount. I've seen it 5,000, 10,000, 15,000. It's
Yep.
just a small line item for MedPay. And it's just something to keep in mind that a lot of times we can avoid a large loss from being turned in and paid, and it can just get covered under the med pay. Terri, do you want to give us or little snippets of the example that you just had recently where it was used? Do you mind?
I don't mind. I'm going to change some circumstances to protect the innocent. Um, let's say, let's say a board member was riding a bicycle through the community and hit a speed bump that has been there for many years, but for some reason they hit that speed bump and they had an accident on their bicycle. Um, that person needed some dental work completed, and that person maybe didn't have the proper medical coverage for reasons that really are irrelevant right now. But they absolutely had to get their mouth fixed, right? So they turned in a claim to the association. It was a small amount. They turned it into the med pay liability and it paid out. I want to say it was like $2,000 maybe. The person got their mouth fixed. There wasn't a huge hit to the association's insurance policy, and the whole situation just kind of went away. That's
Mhm.
what I call it, make it go away insurance. So,
Yeah.
um, so it's not a huge deal if it's a situation where it's a small amount someone's asking for. Using MedPay is usually much easier and less
Mhm.
complicated than having a lawsuit filed and attorneys involved and all this
Mhm.
other stuff. It's just a small payment. Their medical bills get paid for and it goes away.
Yeah. And my recent example was similar. It was a broken arm and ended
Yeah.
up in the ER, and there were some bills involved, and we were able to get it covered under the med pay.
Hmm.
Next
Much easier.
slide.
So now we have the claims process, how this is all going to work. So we have a few different players in this process, and we're going to talk about the roles, the typical roles that each person plays in this process. So the role of the community manager usually is the point of contact for the claim. They have the list of vendors that they usually use that they can go to. Sometimes the carrier offers some other vendors. There are some carriers now that say, hey, if you turn over this whole thing to us, we'll manage it all. You'll use our preferred vendors. And sometimes, not always, it works great and everything gets taken care of rather quickly. Um, but the community manager also, they collect the payments, they pay the vendors, they stay in the loop, they keep track on, they're kind of like the project manager for the whole thing, right? So that's the role of the community manager. The insurance professional, on the other hand, we're going to make sure that things keep moving. We're going to advocate for the client. We're going to make sure that the needs are being met by the client. And by client, we mean the community. So the manager, the board, the individual that had damage to their home. Charlotte was going to cover what to expect during that time.
Yeah, so what can you expect? You're going to be assigned an adjuster, or you should be assigned an adjuster and a claim number. Again, this is really just to keep record and have that reference. Something to keep in mind, and I just want to rewind a little bit. Some insurance agencies actually have a claims manager on staff that can help
Mm-hmm.
facilitate all of this and
Yep.
truly act as an advocate for the client. Because sometimes claims adjusters are not super easy to work with.
Get
Yeah,
out.
I know. Surprise, surprise. So just keep in mind there's different types of claims adjusters out there. And if you are one of the lucky associations that actually gets multiple insurance options nowadays, I know it's unheard of, but back in the day, we could go shopping for insurance and give you 3, sometimes 4 options and walk you through all of those options. Now we all know that you're lucky if you see the one option, but you see all of our marketing efforts and you're like, oh my gosh, everyone else denied me. Okay, not really a lot to compare. But if we get back to a space where you have some insurance options to compare, one thing you might want to ask your insurance provider is, tell me a little bit about how the adjusters will be assigned for this particular carrier. So you may have one carrier that has a claims adjuster in-house, meaning they have their claims adjusters, they work for the insurance company, they understand HOA, how it works, they understand California law, all good. And things can sometimes move along in a more quickly manner than other types of adjusters. So just know that there could be an in-house claims adjuster and there could be a third-party claims adjuster, which can be okay. And other
Yep.
times we've seen it work not so much in the association's favor. And this is where we would have like our in-house claims manager fight to remove that adjuster, because here's some real life examples. We've had third-party claims adjusters that were in a completely different state and really didn't understand California and fire and all of that, all of those nuances. We've had adjusters that had no idea how to work on a condominium. Clearly, their experience was with single family homes or other types of property. So just know not every claims adjuster is created equal, and you really want to work with your insurance partner to fight to make sure that you have that everything moves along smoothly. And if you have a covered loss, that it gets paid quickly, that we get unit owners back in their units if they were had to vacate the unit, and that things move along. There are also public adjusters, and they can be beneficial at times, and other times they can feel a little bit like ambulance chasers. Am I wrong? Okay.
You are not wrong.
Try not to be too controversial here. So when that happens, if you are being approached, usually they'll approach your community manager. If you're being approached by a public adjuster, I always say, you've heard me say it 3 or 4 times tonight, have a conversation. Talk to your community manager, talk to your insurance provider, talk to your legal counsel. If you are in a situation where a public adjuster might be helpful for this particular circumstance, by all means, let's go ahead and use a public adjuster. But every situation is going to be different. So I just want to make sure that you are having that conversation, especially with your community manager.
Yeah. And remember that public adjusters do take a cut of whatever insurance payment is being received. So remember that even if they do get a good payout for you, they're taking part of that for themselves. So that's going to be deducted from what you're going to get to rebuild.
Next slide. All right. Speaking of wicked witches, no, who said that? So let's talk about the responsibilities of the adjuster. Again, going to be accountable for the experience of the manager, the board, and the unit owner. So we want to make sure that they're working swiftly, that they're communicating. If they're not communicating, making sure that you're getting your insurance provider, your broker, your agent involved and pushing that along. We really want to make sure that we're letting them be the bad guy when needed, meaning these adjusters are responsible. This is their sole purpose, to determine who's responsible for what. We don't want the board to take that liability on and try to determine these things. We want to allow the adjusters to do what they're best at, determining where the money is going to come from. And
And the
keep
boards
in
are
mind,
bad guys and the managers are bad guys often enough. Let somebody else take the heat for once.
for sure, for sure. And but we all want to point fingers, but most are not trying to exclude coverage. They are trying to find where the coverage is coming from. So I always like to assume best intent for everyone I come across, even adjusters. Next slide.
So documentation is so very important. Make sure that you are keeping track of everything, not just taking the photos and keeping those, getting copies of any reports from fire, police, medics, whoever. And this is for any type of claim, not just a property claim. So this could be a liability claim. You had somebody trip and fall by the pool. This could be, let's go back to that vehicle into the building. You want all the information you can to see what happened. Obviously, nothing the HOA did would result, I'm thinking, would result in the vehicle hitting a building. I don't think so. I don't think the HOA can do anything that would make a car hit a building, but you want to make sure that you get all of these documents written down and don't try to rely on your memory. As great as our memories might be, what if some question gets asked a couple years down the road? This happens sometimes. So make sure that you want to have as much information as you can, gather everything, provide that to the adjuster, provide that to the insurance professional that you're working with, the claims representative or whoever, and make sure that it's saved somewhere, even in the cloud, so that years from now, if you need to refer back to it, you can. So make sure you save everything along with that claim number. When you get the claim number, share everything that you have. So I'll use another real life example. We were working on getting new coverage for a community, and there was an old claim that was still open. It showed as still open on the loss history report. And this was like 4 years ago. They had switched management companies 3 times during that period. 3 times. So we were trying to figure out what exactly happened, who did what went where, what exactly is this claim about? Because I mean, Charlotte will back me up on this. When we get those loss history reports, I don't know one carrier that is really good at describing any claim, like at all. Terrible. So the more information you have documented, I was actually running point talking to 3 different management companies, to probably 4 different managers, trying to pick their brains and memories to see if they could remember exactly what happened during this one claim, because it was so non-specific in the loss history. We wanted to make sure that whatever it was that happened would never happen again, but we couldn't figure out what the heck happened in the first place. So documentation is very important. I think we can go to the next slide.
All right. And I know we want to give enough time for Q&A tonight, so I'll probably try to get through this one pretty quickly. But obviously, we want to avoid claims, and we definitely want to avoid those petty claims that just don't need to be turned in. And one way to do that is by increasing your deductible, which I sort of laugh at these days, because 10 years ago, in a much softer insurance market, this was really kind of one of our favorite things to negotiate. If we had an association that had a couple small losses, maybe there was a little pattern showing, we may go to that board, go to that community manager and say, you know what? You're a great risk, but you've had a couple little patterns of insurance losses. What do you say we take your deductible from $1,000 to $5,000, or even $2,500 back in the day, just to make sure that we're avoiding those petty losses. Unfortunately, we are in a place where most insurance companies are now dictating that and saying, hey, lucky you, if you want insurance at all, you're going to have to take the deductible that we're willing to give you. And that could be $100,000 in some circumstances, and even higher for some of those harder to place risks. So if you have a very low deductible, lucky you, or not so lucky you, have a conversation with your board and your community manager if you want to start increasing that deductible. Or you may want to start looking at, or your insurance company is going to force you to start looking at separate deductibles. So maybe you have an all other perils deductible of $10,000, but for water claims you have $25,000. And maybe that is negotiable because you know you had a couple small water claims, but let's keep you insured and increase that water deductible. The best thing that you can do, and I recommend to all boards, is adopting a policy for your deductible. I call it a deductible policy. You can have your attorney write it for you, but what's nice is you can have this kind of set of rules of, if this happens, this person or party is responsible for the deductible. Some governing documents may specify this. I've seen policies written a number of ways. I've actually seen some deductible policies for a few associations where the association wants to take responsibility for the deductible and will even put it into their budget. So whatever that is for you, it can be different for everyone. Having that documented can be really helpful, and it can prohibit a lot of back and forth arguments or neighbor to neighbor disputes. And again, pointing the finger. Well, wait, no, you were the one that started a bonfire in your living room. You should be responsible for the deductible. Well, instead of that back and forth, if we just have a policy written, then we know, yep, you know what, this particular incident, it's going to be you, the unit owner, that's responsible for this deductible or whatever the policy is.
And if the policy or rule or whatever you put in place is super clear, that also is going to help that individual owner to submit that cost to their own HO6 policy and get it covered. So you could get the part of the deductible that you're responsible for paying, you can get that paid out of your HO6 policy.
Reimbursed, yeah. Next slide. So after the claim, I always say this too shall pass. So when you wake up after a long nap in the poppies, we can recover. And I just want to stress that. It can be really, really stressful to turn in a claim. A lot of boards are worried that, oh my gosh, if we turn in this claim, we're going to be non-renewed, our insurance premiums are going to go up substantially upon renewal. And yet, you know what? Sometimes that's the case. And I used to laugh, again, 10 years ago, 15 years ago, I could say, don't worry, for every one insurance company that doesn't want to write insurance for you because of this loss, there's 5 more lined up that do. But here's the truth. Yes, we're not in those times anymore. We don't necessarily have 5 that are lining up, but everyone should hear the full story. Every insurance company should be getting submissions from a competent insurance provider that says, yeah, they had this loss, but it was a fluke incident. A car ran into the building. What's the likelihood of a car running into the building again? Slim to none.
Don't jinx it.
They don't jinx it, right? Or, hey, you know what? This is real life incident. We had an association that actually had 3 small fire claims in like a 3 to 5 year period. And they were all started from dryer vents not being cleaned out. And I could see an insurance company going, I don't want to write this policy. I don't want anything to do with this association. But what we were able to do was get newsletters out to all community members, letting them know that these need to be cleaned out, that these incidents happened, and we were able to share that newsletter with the insurance provider. If you've had water issues and you've done a pipe replacement, this is really valuable information that we as insurance providers want to share with the insurance company so they know that this particular association, yeah, they had a couple water losses, but look, they did something proactively to prevent it from happening again. So all of this information, and again, we're looking at your community manager as kind of the streamlining person for all of this. We want to make sure that we're having conversations often on what's being done at the association level to prevent these from happening again. And these stories can go a long way. Next slide.
So remembering all of these things and these stories and conversations that can go a long way, insurance carriers are getting a lot more picky about who they're going to offer insurance coverage to. So that's how the current situation with insurance is. It's still a crisis situation. It's improving a little bit, but it's getting a little bit more stable. But it's because they're getting pickier about who they're going to offer insurance for. Sometimes they're only going to offer you a limited amount of coverage. So you need to understand the situation from the carrier's point of view so you can understand how to help paint the picture from your point of view to make you look like you're not a risky thing for them to take on, right? We're going to get into some more of these little details in further slides, so I'm not going to spend a ton of time on this slide. Let's just go to the next slide and see what's behind the wizard's curtain.
So none of these should be hidden from you, actually. Again, we should be having these conversations with you, but we wanted to stay in theme. So some of the reasons that carriers are non-renewing or being quite picky about what they'll insure, some of the factors include loss history. So again, if you have a pattern of losses and you haven't done anything to prevent those losses from happening, that's the important factor that can be taken into consideration. Open claims, Terri talked about that one that was open for 4 years. Insurance carriers do not like open claims. So if we can get claims closed or find out where we are in the process before that renewal date, that's even better. Dangerous conditions, and really this is kind of like lack of preventative maintenance. So if you haven't done your balcony inspection, if you needed to replace some balconies, if you've got some dry rot, if you were due for a new roof 10 years ago and you haven't made any strides to get a new roof, these are all factors that are going to be taken into consideration by an insurance carrier, and they may or may not want to insure you depending on where you are in your maintenance process. Aging infrastructure, they are very much discriminating against our older communities. And it pains me to say that an older community is 25 years or older. That's brutal, just brutal. By the way, I live in a home that was built in 1959, so it's doing all right. But they are scrutinizing that. So any of these quote unquote older communities, we really need to make sure that we're staying up to date on anything that's been done to prevent loss, to keep the maintenance up. And this is a tough pill to swallow, especially for like our major metropolitan condos, San Jose, Oakland, San Francisco. You may have this beautiful high rise that was built in 2021 and it's got all the bells and whistles, and all of a sudden you have your insurance carrier saying, oh, but you know what? You are too much to insure. I don't want to write anything over 50 million or 75 million in total insurable value, TIV, remember the acronym. So this can be really frustrating because some carriers are no longer willing to take on larger risks, even if they're perfect in every way. So next slide. All right, so let's talk really briefly about carrier differences. We know that a lot of associations recently in the last 3 years have gone from what we consider the standard California admitted market to the surplus lines market. So really quickly, and this might be review for a lot of you, but I think it's important to talk about, California admitted insurance carriers do adhere to the Department of Insurance. They have to file all of their policies. They have to file all of the premiums that they can charge through the Department of Insurance. So your rates are checked annually. And there's a California Insurance Guarantee Association. We refer to it, acronym again, CIGA, which basically states that if you are insured by a California admitted insurance company and you sustain a loss and that carrier goes insolvent and cannot pay the claim, we, the CIGA fund, will pay up to $500,000 for your loss. I love a guarantee as much as the next guy, but I also want to just call out that $500,000 for an average size association probably won't go a very long way. So don't think that it's the best thing in the world just for that one, certain area. We've seen lots of changes from our California admitted market due to the insurance crisis. And that's basically, hey, we don't have enough policies to go around for the risk at hand. So a lot of folks have found themselves in the surplus lines market. And basically these surplus lines carriers, some of them go back to the start, the beginning of insurance, the beginning of time, if you will. They are big carriers with lots of money in reserves. They're not the worst thing in the world, but something to keep in mind, they do have the freedom to charge appropriately based on the risk. because they're not adhering to the Department of Insurance. They're not having to submit any rate increases through the DOI. They're able to adequately charge what they feel is appropriate based on your risk. There are fewer consumer protections, so you're not going to get that SIGA fund. Sorry, if you're a $15 million association and you need that $500,000, you won't get it with the surplus lines. And the surplus lines carriers, because they're charging what they feel is appropriate based on the risk, are typically more expensive. One thing that I always say is I'm very, very grateful, and I know my boards are very grateful for the surplus lines market, because if you found yourself unable to get insurance through California admitted carriers, there's been a lot of surplus lines policies that have come through and given you appropriate insurance that meets the requirements of your governing documents, meets the requirements of your lenders, Fannie Mae, Freddie Mac, and allows you to do business as usual as an association. Do I love that you're paying more for your insurance? Absolutely not. But my goal, our goal as your insurance providers, is to get you out of the surplus lines market as quickly as we can. So talking about all the things that Terri and I have talked about tonight. Hey, what got you into the surplus lines market? Oh, our lack of maintenance. Hey, if you do that roof project, we might be able to get you back in here. So let's have those conversations and get you back to the standard markets, but also be grateful that we had the surplus lines market to lean on before you could get all of those things done and accomplished.
Absolutely.
Next slide.
So with all that in mind, and knowing that there is no place like home, what options do we have? So I think we go back to making sure that you're being proactive, you're resolving those infrastructure issues, trying to acknowledge those issues before you get non-renewed or before your insurance gets canceled. So if you find out about something midstream, hit it head on. Say, all right, we understand the insurance carrier wants to cancel our insurance or non-renew us because we have, and I can't believe this is the first time I'm saying this during this presentation, Zinsco panels. We have Zinsco panels. We know that now. Please don't cancel us. We will have this project completed within this many days. And a lot of carriers will work with you on that. So being proactive is less expensive than being reactive. So get in front of it and communicate all of the information that you're taking on, not just to your membership. It's important to communicate to them too, but also to your insurance professionals, and make sure that they're giving the information to the carriers. Understand what you can and cannot control. That is something that's really important for a lot of associations right now, especially those ones that are getting forced into the surplus lines market, or even worse, into the FAIR plan. You cannot control where your association is located. If you were built in the middle of the forest, you're built in the middle of the forest or on the coast with a beautiful view, or you can't control where you're located. You cannot control how old your buildings are. They are what they are. Things that you can control are what your reserve study looks like, that preventative maintenance that you need to take care of, communication with your membership so they know what's going on. So make sure you understand the differences between those two very important things. And we can go to the next slide. So every year you want to review your insurance. After a claim, definitely, but before your next renewal, for sure. Make sure that all of those things that you've done, all that preventative maintenance you've done, all those electrical panels you've replaced or repipes you've done, make sure that all of that information is given to your professional. And if you're working with a new professional, let's say you've switched companies because your old carrier non-renewed you, but you did that electrical project 5 years ago, that new person needs to know that you did that project 5 years ago. So make sure you give us the information, because our job is to paint a beautiful picture of your community and make you look like the best risk possible for those carriers to take on. If you provide us with that documentation, it's much easier for us to do that. Communicate with your membership, communicate with your insurance professionals, prevent future claims. Confirm, we've talked several times about going back and looking at your loss history report to make sure the claims are closed, and also that any reserves are removed. A reserve that shows up on a loss run is what the carrier thinks it's going to take to make that claim go away. So it's not closed yet. We think it's probably going to take $25,000 more and then it'll be closed. So when it's closed, it's going to be there while the claim is open. When the claim is closed, sometimes folks at the carrier's office forget to remove it. Make sure it's removed. And then consider what else you can do for your community. Can you get FireWise certification? Can you join a fire safe council, especially if you're in high wildfire locations? Have open dialogues with your fire departments. Back when I was a manager, I managed a senior community, an over 55 community. We used to have fire drills with the local fire department. I think the little ladies that lived there just wanted to see the firemen. I don't know, but it worked. I mean, everyone came and we ran these fire drills once a year, and it was actually a really fun event for the community. And I think it would be even more fun if you had like little kids there with the fire trucks and all that. Um, so consider different things that you can do to make your community more safe, because really, take insurance out of the picture for a hot second. The most important thing for you to do is make sure that you're protecting your community, you're protecting your members. And once you do that, then you share that information. That's definitely going to make you look like a better risk. Okay, next.
All right, this is the last slide before our Q&A. And let's just talk quickly about the value that the HOA insurance professional can provide. And really, yeah, it's everything that Terri and I did tonight, and that's education. But truly looking at this, recognizing those red flags. Again, if you have a provider that doesn't ask for governing documents, that doesn't want to visit your property, that won't discuss exposures with you, that won't attend your board meetings and educate you in any way, those are red flags. You really want to work with a partner. Their knowledge can be really, really helpful. Their experience, if they specialize, if they understand HOA, really, really important. Also, CID laws. If you're working with someone or you would contact a provider that doesn't know what the Davis-Sterling Act is, red flag. Also, keeping up with industry current events and trends, following what's going on with the legislature, following what's going on with the Department of Insurance, following what's going on with fire ratings, fire mapping, all of that good stuff. Understanding policy language and passing that information along to the board. So asking to review options with your provider, asking for some clarification. What the heck does MedPay mean? It's okay to ask these questions. And education is everything. Everything that Terri and I provided tonight. If you're, whether it be your particular association and helping out with a town hall style informational night so that everybody within the community has the option of getting the information, especially if you're looking at special assessments or higher premiums for insurance, it can be really helpful to bring in your insurance provider and have them lead a town hall style meeting. It's one of my favorite things to do. I know it can be, tempers can be pretty high if they think that they're going to get a special assessment, but it's really important that we educate the entire community. And again, taking that liability off of your shoulders. I don't want the community pointing fingers at you, the board, or your community manager for where we are in the insurance industry. I would rather you hear it and your entire community hear it from an insurance professional. So please
Absolutely.
do invite your providers out for that.
Wait, did you say make us the bad guy? Let us be the bad guy?
Yeah, you can let us be the bad guy, but
Yeah.
usually that just gives us an opportunity to educate, and it's more of a system failure than a Terri or a Charlotte failure, to be
Yeah.
All right, Q&A. Kristen, did we get any good Q&A in the chat?
Well, just so everybody knows, there was no Q&A button. I think we all figured that out early on. But I have turned on the chat. So if you have any questions, you can go ahead and submit them. And then you can always raise your hand like Astrid just did. We did receive one question in the chat from Kay, and she wanted to know regarding MedPay, if that was a standalone policy or is it part of another policy?
It shows up under your general liability policy. So if you're looking at the certificate of insurance, the one with all the boxes on it, you'll see your general liability coverage. And then under what your limits are, you'll see one of the boxes says MedPay.
And it's usually, again, a small sublimit. So I've seen it 5, 10, 15,000.
5, 10. Sometimes it's excluded now. A lot of times it's there. And MedPay stands for medical payments per individual. I think it's per individual.
Oh, I think that sounds right. We don't know all our acronyms now, do we?
Look at that.
Thank you so much. Next question is from Astrid. She's going to go ahead and unmute herself and share her question.
Yeah, thank you for this. Very informative. This is probably going to fall under the fault is irrelevant and it's not who is right. It's usually who has money. But let's say you have a case where your CCNRs are incredibly clear that this is a walls-in policy and that every homeowner must have an HO6 policy. And you have a situation where somebody has installed an illegal washer and dryer. The CCNRs say no washers and dryers are allowed.
Mhm.
You let your insurance company know that this was completely a homeowner-caused issue. The washer failed and destroyed both their unit and the unit below. And you are very clear with your adjuster about the fact it was an illegal washer and dryer. The homeowner submits the claim to their insurance company. Their insurance company, of course, says, no, we want the association to pay for it.
Mhm.
The insurance company has so many people involved, an adjuster, an outside subrogation, a blah, blah, blah. And they submit the claim and say that it's a sewer leak. So the HOA is on the hook now. You tell your person, your insurance people, again and again, this was not a sewer leak. This was a homeowner installed illegal washer. Goes through as a sewer leak, and now your insurance is canceled. Your new insurance goes up $100,000. The unit and the unit below are completely being restored, including stuff that wasn't damaged. And so now every homeowner is paying an extra $30 to $40 a month for the foreseeable future for something that was a claim that should have been completely on the owner's backs. What do you do? Where do you go? I mean,
I
other
feel
than
like we need to
litigation,
Rochambeau, and there's so many parts to this
Yeah.
too. Which part do you want, Charlotte?
Well, so there are so many parts, and I'm going to say this is clearly a very specific incident.
It
And
is.
there's unfortunately, a lot of our answers are like, it depends. And so I think it's unfortunate that this has transpired, and you did everything right by letting the adjusters do their work. And what they came up with sounds like it differs from the board and probably a lot of the community members' opinions. And I understand the frustration. So I just want to start with that.
Yeah.
Terri?
I'm going to go back to those three questions. Is it a covered cause of loss, regardless of the fact that it wasn't supposed to be there in the first place? You're also not supposed to put rice down your drain and flush
Diapers
teddy bears
down your
the toilet.
toilet.
So regardless of it not supposed to be there in the first place, is it a covered cause of loss? Sounds like it might be. Is the property that was damaged, is it covered under the policy? Sounds like a lot of it is, maybe not every bit of it, but the walls, the floors between the units. And there's this thing called gravity that works every single time. So if you're upstairs and there's water, and I see John has a similar question, water damaged between stacked units, gravity works. That's a constant. So the water's always going to go down. That's nobody's fault. It just is. So is this a covered cause of loss? Yes. Is the property that was damaged covered under the policy? Probably. Is it over the deductible? Sounds like it is. So it meets all those criteria. What happens? Same thing with the lady that started the bonfire in her unit. Was everybody happy with that? No. Should she have done it? Absolutely not. But what you want to do is have the damage fixed. Pointing fingers is not going to be productive. And you said a very long word that confuses a lot of people, including insurance folks, subrogation. So eventually, fault is going to be assigned. If it was definitely somebody else that did something and they are liable for all of that damage, that carrier can subrogate, go after whoever did this damage and get reimbursed from them. If they do get reimbursed from that party, then they will pay back the association. So whatever deductible you had to pay, that will be reimbursed to you, all of that. There's another part. So yes, if it meets all those criteria, it's covered, all that. As frustrating as it is, it's going to be covered. and then later on we'll fix who's responsible for paying for it all. The other part you said about your insurance going up, Charlotte, you want this one or you want me to keep going?
No, go for it. I know where you're going.
Okay, so in most governing documents, there's a provision that says something to the effect of if someone in the community does or does not do something that results in an increase in premium or something to that effect, then that owner is responsible for the increase. So I would talk to your attorney and say, is that person, because they clearly did something they weren't supposed to do, they're responsible for this increase because of that water damage. You got canceled and you had to go to a different carrier and now you have to pay more. So that increase, in my non-legal opinion, would be the responsibility of that owner that had that claim. Have I done that before? 100%, absolutely. We had someone that refused to replace their old electrical panel. We said, all right, you don't have to replace it, but when our insurance goes up $45,000, that's on you. And the attorney wrote him a letter and saying, $45,000, please. They went and changed it. So you can absolutely recoup things after, but in the moment while it's happening, as frustrating it is it's probably all going to be covered.
I appreciate that. Just very quickly, the other thing that I don't think maybe, as I said, we were very clear what caused this. The adjuster put down it was a sewer leak. It was not a sewer leak. So I don't know where to go with that. That's why we're on the hook now. So
backup of sewer and drain and sewer leak fall kind of under similar things depending on the carrier and how they have things defined in the policy. So it could be something like that. But that's also something to communicate with whoever's handling your claim from your insurance agent side. If you have a disagreement.
Yeah,
great.
I was going to say,
thank you.
The first thing that Terri brought up earlier too is insurance companies are not great at defining what happened when it comes to a loss. So just slapping sewer drain backup on it was good enough for them sometimes. That's frustrating. Two, I think this is exactly where I would lean on the insurance provider, your broker, your agent, for a little bit of help in this instance. You know, this has happened where we see a claim being paid that, wait a minute, we're reading the governing documents and we don't think that this should even be, you know, a covered loss. Or, you know, in your situation, they're stating that it's this, but it's actually that. And so not taking that on as a board member, but really leaning in on your relationship with your insurance provider could help.
Thank you.
I'd want to fight them on it and say, hey, no, you guys labeled it wrong. This is incorrect.
Thank you.
Yeah.
Great. Thank
Especially
you.
if there's a sublimit on there that's going to hit you.
Thank you very much.
Sure.
Thank you. Okay, our next question is from Rachel. And let's see. Yep, she's got it.
Thank you. I'm a new board member, so I actually haven't even gotten the insurance coverage documentation yet for my community. But we already had a request about one of our tot lots where there was damage to the surfacing. Some people had already discussed this on the previous board, and one of the previous board members said that they knew the person that was causing the damage. And it was a minor and they knew where they lived. So I wanted to ask if we do have tot lot coverage, how that would play out, if we should talk to the homeowner, if we should go through the insurance, if we should just pay for it out of pocket and, you know, not even worry about it because the increase to the premium is not going to cover even how much money you would save through a claim.
I think it's worth a conversation. I also, you know, I don't know what kind of damage we're talking about, and I do know how expensive tot lots are. I built one in my community. It's very expensive, but you know, without knowing the information, I question too, is it going to exceed the deductible? And then is it worth, you know, the board going to that homeowner and saying, your kid did this? I also have a lot of teacher and principal friends, and I know that telling a parent that your kid did this doesn't always go over well. So I would say, you know, it might be a slippery slope. I think it's a very specific incident and a specific event. I would start the conversation with your community manager. ask yourself some of the questions that we talked about tonight. And then if it's something worth pursuing or having more conversation with your insurance provider, then having your community manager get your broker or your agent involved.
I have a couple other ideas too, especially if it's involving a minor, right? And nobody wants to tell a parent your kid did this. Let's say you don't know who it is, or let's just pretend you don't know who it is. You can send communications out to the membership saying, hey, we've noticed there keeps being damage at the tot lots. We want to make it safe for everyone. So please make sure, blah, blah, blah. You can put postings up in the tot lot saying, remember, this is for everyone. If this keeps happening, we're going to have to close down the tot lots. Work with attorneys to find out what you can and can't say. Because when you're dealing with minors, things can get a little slippery there. You want to make sure you don't want to say something that's going to turn around and bite you. But yeah, just
Have a
and
conversation.
you don't want it to end up being unsafe too.
All right, thank you.
And welcome to the board, Rachel.
Yes, welcome. Thank you for your
Thanks.
service.
Our next question is from Eric Oliver. He's wondering if you have a resource. Do you have a recommended basic checklist fill out form for community managers to use for losses and track key information? They had a claim and they didn't have a checklist, and so he developed his own.
Oh,
Thank you
I
for
love that.
developing
Okay,
your
when
own.
you were first reading it, I got excited because Terri did a presentation not too long ago and came up with a checklist, but it was for like
Aging
updating and
infrastructure.
infrastructure and to keep track of everything that the association did. So I got overly excited.
That checklist I have.
Yeah, I would say I don't have something for a homeowner or a board member. We keep track of things obviously on our end in our system, and we've got some checklists, but they're more broker specific.
But it's
So
a good
kudos
idea.
to you for creating your own.
Yeah, and I wonder if he means like the process, like, oh, you first do this when you discover a loss, and then you do that, or does he mean what you submit? Oh, go ahead, Eric.
Yeah, I mean, like just unbelievably basic stuff. Nobody
Yeah.
thought to write down. Who were the tenants? Who were the owners? What is their HO6 policy carrier name?
Yeah.
What actually do we think happened? Nobody thought to write that down anywhere. And
There's usually incident reports
nope,
that get
there is
followed.
no standard form or
Okay.
so and our attorneys didn't have one, our broker didn't have one. And I think this is a real gap because nobody knew to write down the names and phone numbers of everybody involved, like just basic stuff. And so we're still unraveling this and like, we don't know who to contact, right?
I have just written down on my to-do list, claim checklist.
Okay, well, Terri, I'll shoot you an email of what I made, and I see your email from the thing, and if you want to comment or edit it, I welcome it.
Yeah, I love it.
It was a surprising gap, and our attorney's like, yeah, we don't have one either. Like, I'm like, but you're a huge law firm that does nothing but HOAs, so anyhow, we were surprised.
Well, it's like when you get an offender bender, right? It's like, in the back of your head, like, I need to get their information. I need to give them mine. But all of a sudden you're in this fender bender, you've been hit, you're on your way home to make dinner. And suddenly, like, where does your brain go, right? So it is nice to have that cheat sheet in front of you. That's awesome.
Yeah.
Thank you, Eric. Another comment, I believe, for another resource from John Flint. He's wondering if there's an easy way for association managers to provide proof of sprinkler system, central alarm monitoring for homeowners when they renew their HO6 policies.
Well, Chris, and I feel like that's a question for you or the management team. I mean,
right. I think generally we talk to your community manager because you should, assuming that your HOA is on a portal, and I believe it should be, unless you decided not to do that and you have your own special website, which some clients do something custom. You could definitely add a folder, and then when the annual is done and the 5 years done, you could simply just put the inspection results on there. So talk to your management team and see if they can do that. And then if there's any complications through that, then you could always escalate it and get additional support from leadership.
We don't have a template. I see the question come up again. Is there a template letter from the insurance agent? We don't have one. I don't know if you do, Charlotte. I know when we're getting the credit for fire sprinklers for the association, what we're required to gather and provide to the carrier is actually the certification forms, which are pretty, I mean, they're several pages each, and there's like one for every building, right? So it could be a lot of documents, which you might not necessarily need because you're just in one building. So I think that goes back to the manager as far as providing that.
Thank you guys so much. Did anybody else have any questions? Oh, very much at the end. I'm going to go ahead and shoot it back over to Jeremy. And Jeremy, if you could remind everybody to take the survey.
Remind everybody, take the survey when it comes to you. All right, guys, thank you so much for being there this evening. Thank you so much to Terri and Charlotte for an absolutely amazing job, a great presentation, lots of information, great takeaways. So hats off. Thank you guys very much. Obviously, you guys are the experts in the field. So thank you so much for giving us your evening. To all of our board members here, thank you so much also for just breaking some time away from your families and your normal daily routines to spend some time with us this evening. I think I got some stuff out of it. I hope you did too. Again, when you get the survey, please take an opportunity to fill it out, complete it. It's helpful to us as well. Special thanks to Kristen for her time as well and her putting the presentation together and getting it going. Yeah. All right, guys, have a wonderful rest of your week. Thank you again on behalf of Manor and Keystone. Enjoy your holiday season as they begin this week with Halloween. Be safe out there. And thank you again very, very much.
Thanks for having us.